It's just really about helping you get clarity as to how to move that forward. Once they do it, 100% of the time, they always say, man, I should have did that earlier. Make a contribution, and people are smart in general. So tap that, empower them, and extract that data so it helps you move forward.
Yeah, love that.
Ended up going to a private equity firm for over 2 times our original value.
Wow. Hello, everyone, and welcome. My name is Philip Palumbo. I'm the host of the Palumbo podcast, where we interview some of the most successful founders of businesses and professionals that work with founders who are looking to exit their business. Today, we are fortunate enough to have with us Vincent Mastrovito, a nationally recognized expert in succession and exit planning. Vincent is the founder and president of Prometheus Partners and brings more than 3 decades of experience helping business owners navigate one of the most important transitions of their professional lives, exiting their business with confidence and clarity. Vincent began his career in 1989, spending 20 years with Lincoln Financial Group before launching Prometheus Partners to focus exclusively on what had become his true passion, working closely with business owners on exit planning strategies that maximize value and ensure a smooth transition. A certified exit planning advisor, certified business exit consultant, certified value builder, and certified DISC Plus coach. Vincent has completed advanced programs through the Exit Planning Institute, Pinnacle Equity Solutions, and the Business Enterprise Institute. He's also the founding president of the Exit Planning Institute's West Michigan chapter and a respected national speaker on exit planning and value creation. So Vincent, you're a perfect guy to have on my podcast to talk about a topic that I love to talk about. So thank you for being on today. Really appreciate it.
No, thank you. Thanks. Glad to be here. Thank you.
All right. So first, Vincent, let's start off with telling my audience exactly what you do.
You know, exit planning can sometimes be a misunderstood term, and it's really about preparing the business and understanding what quality the business is in at that point in time. And we'll just use today as that point in time. So what's the quality of your business, and how well can you sustain the cash flows to move them forward, and then be able to work with them, understanding what their objectives are, and then taking with what we've discovered in our analysis and helping them map out a runway so they can not only transition out of their business, but they can monetize as much of that value as they want to. And what we find, Philip, in most cases, and when I say most, it's probably 99% of the cases, we will double the value of the organization, usually over a 3 to 5 year cycle. So if you just think about it, if you have a business worth $3 million, by going through a process, you are most likely going to bring back an additional $3 million in your pocket that you can use as income when you get ready to transition out.
Love that. And I want to go through the details of that too. And that's why the biggest thing I always talk to my audience about and educate founders of, everybody thinks that, the day to plan is the day you're ready to exit. And the day to plan
Right.
is way before that, because of what you just said, right? So having professionals like you come in, do what you need to do to improve the business to get into best in class, that's how you can increase and turn that multiple 1, 2, 3 times, 4 times, or even greater than that. And that's putting millions of dollars in people's pockets. And that's what excites me so much. So when you say, well, let me ask this first question. So as it relates to what you just said, in your experience, what is the biggest mistake founders make when they think that their business is worth more than it actually is?
What do the business owners think when they believe that their business is worth more than what it is?
Yes.
Probably try to go to market too soon.
Right.
If we take a couple steps back, I'm a person of, numbers. Numbers usually, I've never seen numbers lie. The old saying, numbers never lie. So if 20% of businesses that go on the market sell, so every 10, only 2 of them sell. So that's a pretty low number if you ask me.
Yeah. So why is that?
Because they're not prepared. There's always issues going on with the organization. And to your question exactly, Philip, is they're going to market without really being prepared.
Right.
Okay. So I'm a big sports guy, and I'm a big Michigan sports guy. And so
Nice.
we just won the national championship, right?
Yeah. Congratulations.
So they didn't go into that game unprepared because they played terrible. If you look at it, they shot 13% from 3-point range. Um, their MVP, Big Ten MVP guy was hurt. They had a lot of issues going on there, and they still won the game by playing it the same way that UConn did. And congrats to UConn for getting there also. But the point is, in a business, you have to be prepared as to what's going to happen in due diligence. And it's not just about looking at a very attractive P&L and balance statement. You have to take a look at how transferable is the cash flow inside of your organization to a new owner. And if I come in there and I'm going to write you a check for 5, 10, 50 million, 4 million, whatever the number is, I got to make sure that that business can have a pretty high return on investment, that I'm going to get my money back and I can move that organization to whatever level that I want to move it. I don't want a job. I want a return on investment so I can move it forward. And so not being prepared is one of the biggest reasons why businesses don't sell. And it's one of the biggest reasons why most don't get the number that they're really looking for,
Right.
because there's always some flaws in there. And it's not because they're really deliberately doing anything wrong.
Right. Of course.
They're running the business. They're trying to create their revenue. They're trying to do the things that they do. And so you have to have certainly someone like us that if we come in and we're looking at it from an objective perspective, then we're saying, hey, here's some things that you could fix. And if you have enough runway, if you have enough time and you're willing to do that, then you can create more value. We're not asking you to increase your revenue by 30%. We're just asking you to make the business more transferable and attractive.
Yeah. Love that. So Vincent, I give you a decent business. What are things that you look to fix immediately? 2 or 3 things that you look to fix immediately that could help the business?
Owner dependency, strategic planning, and leadership.
So let's start first with owner dependency.
Most businesses are dependent on the owner well over 50, 60% for the production of the products and or services that they deliver. And so that means that it's harder to transfer that cash, that revenue over, because it's attached to the owner. Strategic planning, most businesses have maybe a 1-year plan, but they don't have more of a 5-year goal. They don't have tactical plans put in place. They don't have all of the other foundational criteria to have a high level strategic plan put in place so that they can make better decisions. Why are they making those decisions, and what's the overall vision of the organization? And then third is your leadership. And most leadership teams are relatively new. They're kind of rookies, so to speak. And so you have to train your leadership to be able to execute at high levels.
So the owner dependency, right, which is something that a lot of people think about. It's big in a lot of businesses.
Yeah.
So if you find you have a business that's owner dependent, what are like 1 or 2 things that you can advise the owner on to relinquish themselves from being where the business is so dependent on them?
Yeah, 2 key areas are going to be in Philip. One is either in sales or operations. Those are the 2 key areas that most owners will function in, one or both. And so either one that they're in, it's about unwinding them and giving up the roles that they do in either one of those areas so that your current team can do it, or bring in another person to do it, whichever is going to make sure it gets to the level that you need. So if you are doing the sales, then if you don't have someone internally that can do sales, then we're going to suggest, hey, look, we need to hire and bring in somebody that can do sales.
I guess the question would be, the owner thinks that nobody can do it as good as they can do it.
Yeah.
Right? So how do you get them over that?
It's just about having a conversation and what is their commitment. We have to go back to when we would start the conversation with the owner and setting the expectations for them and what needs to be done. And we have to be able to, we have to be able to challenge and doubt them. And thankfully, in almost the time that I've been doing this in years, is they like to be challenged. When you push back a bit, and you're doing it in a kind way, but you're saying, Philip, do you really think that you're the only person that can do what you do? I mean, do you really feel that way at the end of the day? So usually they're just going to come back and say, no, but I enjoy doing it. I said, well, that's different. Then let's talk about enjoyment and what you need to do to get you to your objective. And so it's just about having the conversations. Business owners are people, and they're intelligent people. You don't start a big organization. I don't care what size it is, and you're able to build something. Whether you have 330 or 300 or 3,000 employees, you've built something, and so it's just really about helping you get clarity as to how to move that forward.
Right, because every business, right, there's a value that the business adds. There are benefits for the customer or client in working with that particular company. And so what you're really just doing is if the owner is in sales and involved in sales, the owner is articulating the value of the firm, the value add of working with the firm, the company, whatever it may be. Mm-hmm. It's just a matter of taking that owner, replacing that owner with someone else who is as articulate in that and as trustworthy, for example, or likable as the owner, right?
Mm-hmm. Yeah. Like who else can explain the value proposition to your customers and prospects to move the needle and continue to bring revenue in?
Right. Now, let's say you're sitting down with an owner and the owner's like, well, listen, I built an incredible network, and because of my network, that's what's driving the business. The question is if you replace me, not me, but the owner, if you replace the owner with another salesperson, as an example, if that salesperson doesn't have that network that owner has built and reputation, right? What do you do to sort of fix that if you're looking to relinquish yourself of the owner who's driving business?
Well, there has to be a period of time where you're bridging the relationships, where the owner is taking that new salesperson out at meetings. So you got to take your, you take your, if you have 100 customers, you start with with probably the ones you don't have a tight relationship with, and you start moving this person in. So I'm the owner and I'm doing all the sales. I'm going to relinquish 30% of my sales connections. So if I have the top, I'm going to the bottom, and I'm going to let them start here, and I'm going to let them build and get that value proposition and that relationship built. I'm going to introduce them. I'm going to move them through the process. And when I see that they're doing well, I'm just going to continue to move them up the ladder. And what that's done for me is like, okay, well, if I can do that in 6 months, I've just freed up 30% of my time.
Right.
I'm no longer getting these calls. And what's really surprising, Philip, is that once they do it, 100% of the time, they always say, man, I should have did that earlier.
Is that right?
All day. That wasn't as painful as I thought that it was going to be.
That's really interesting.
Yeah.
That's really interesting. I love that, right? Because I could see owners of a business either being operations people or salespeople, or obviously maybe even both. I feel like on the operations piece, that's easier to replace. I feel it's the sales piece, is a big driver maybe what the owner does for many reasons. Because I think people that they do business with like the idea that they're dealing with the owner of the business, and maybe that helps drive business. But going back to what you said before, finding the right person or people is critical. So how do you do that?
Yeah. So let me just kind of also confirm in finding the right people is it won't matter whether it's sales or operations. It's the same process. But to find the right people is you have to understand what is it that you're looking for. So what are the skill sets of this person? What are the behaviors? What is their experience? What do we think their pay scale is going to be? How would they fit in with the current culture and the current clientele? And so you kind of have to go through what the person looks like. If you could draw them up perfectly and incubate them, what would they look like? And then that's how you create your job description. And that's if now assuming they're not internal. If they're internal, it's a little bit easier to transition them up and in. And if you can do that, that's always a good thing to do. But if you're going externally, then that's what you have to do. And then you go out and you go through an interview process, and then you can choose from there.
And like you said, that is a process, but one that can be really, really, really powerful. Mm-hmm. And so I guess when we say to many business owners to professionalize your company,
yeah,
and many of these founders, I've heard that terminology. What does that terminology mean to you?
Well, professionalizing the business is making sure that the business can run without them day to day. It doesn't mean that the business owner doesn't have their finger on the pulse of what's going on, but the business just doesn't need them every day to run every single thing. So when you're taking a look at like leadership knows how to make really good decisions, and I don't have to babysit them along the way. I trust them implicitly, and they can go through and they have their bandwidth of how they can make decisions. If they go outside that bandwidth, then there's protocols that, okay, it goes to this person or it comes back to me. That's how you do it. And that's where leadership is key, because if they can start executing at very high levels with the initiatives you have, you're going to free yourself up. You then are meeting with the leadership team probably on a weekly basis for probably an hour, maybe an hour and a half tops. You have a full dashboard so you can see the metrics, what's happening. Communication is going on. If there's something that needs your attention, it's escalated to a level in the protocols that you have to make that decision.
So this does sound like if you come in, or anybody like you comes in, and mm-hmm. we're looking to get you to best in class, and like you said before, doubling the potential sale at the end of the day, it seems like there's going to be investments that the owner is going to have to make in the business to get it right. Does that make sense?
Yeah. Ultimately, there'll be investments. It's usually going to range between 1% to 3% of their current value, just depending on what state of quality the business is in right now.
Okay, so this is great that you can even attach a number to this. So give me an example of that. For example, let's say you have a business that's worth, keep it simple, $10 million, right? Mm-hmm. Today, you come in and you do your thing. Mm-hmm. And so your goal, let's just say, hypothetically speaking, after 3 to 5 years, now that business is worth 20 million. Mm-hmm. Right? And so what you're saying is the 1% to 3% of the 20 million is what's needed for investment of the 10 million. So you're talking about, right. So you're talking about $100,000 to $300,000
mm-hmm. Maybe
that owner may need to make in order to get that business right.
Yeah, it could.
For the future. Right. Not all the time, but it can. But what percentage of the time will they need to make that type of an investment?
Well, it depends on the company. It's hard to say. I mean, I don't really have a hard number on that, but I think ultimately I've never had an owner say the experience was not worth it, because we let them know that by hiring us, they should expect a 10 times return on investment based on what they pay us.
Right, but the 1% to 3% investment, what I'm saying, that number you're saying is if that owner, if the recommendation is you need to change out the salesperson from you to a new salesperson or professionalize. We're not talking about necessarily the expense of someone like you, but just the business.
No, it does include the expenses of someone like us. It includes the expenses of what other work does their attorney have to do? Does their CPA have to do?
Okay,
how much additional training do we have to do with the leadership team? Do they have to upscale some of their technology because it's a bit outdated?
Right.
So we're not going to go in there and do cardiac surgery. It's just these things are going to be pretty straightforward when we go in, and they're going to understand exactly what needs to be done. And a lot of it is just going to be time and doing the work. It's never really about the money for the owner. It's not that they don't pay attention to it, because they do. They're very smart people, and they're going to make that decision based on what their budgeting is and what they want to do. It's always going to be about time. Do I have the time and desire to really do the work?
Right.
And if they answer yes, then everything else flows right through. I'll give you an example if you don't mind.
Yeah, of course.
So I could give you a number, but the I had a case a number of years ago, and we go in, and originally the organization was going to transition to two key people, so it was a management buyout. Okay, so the primary owner had about 75% of the equity, and then you had two key employees that had the rest of it in different percentages. So they wanted to buy the business from the owner. I went in, and after me and the owner had a general conversation, then we started our process, and we went through, we valued the company. It came back at somewhere around $7 million. And then they went to the bank because we wanted to see about getting financing, and the bank turned them down. Okay, because it wasn't ready yet. So we kept working with them, and we had some challenges with the leadership team. Nice guys, but they just were more siloed. They weren't collaborating at the levels they needed to be. So I told the owner, say, look, if we can't fix this, then there's no need for you to continue to engage us, because we're not going to go anywhere, and this is not going to be money well spent. So, we can bow out. He said no. We had a one-day off-site session, kind of like what we call a come to Jesus conversation. It was very healthy. It was very productive. They came out of there renewed, and they moved that company later. About 4 years later, the key employees decided they didn't want to buy it, and ended up going to a private equity firm for over 2 times our original value.
Wow. Amazing.
Yeah. And then the owner hired us to do another business he owned, and we did the same thing.
Amazing. So Vincent, so when someone who's listening to this, they're a baby boomer, they're 65 years old, right? Very common nowadays.
It
right?
is.
Yep. So they sit down with someone like you, and just listening to this podcast, I mean, right? And you can see that it's going to be a lift to get this to best in class for numerous reasons.
We don't even really need to get to best in class. We just need to get to much better than where they are.
Yeah. Right. I agree with that. So it all depends. I mean, the owner may say, who's got the energy? Hey, let's get this to best in class, right?
Then you can do that.
Yeah, but they have to understand that this takes a lot of effort, and it takes money. And so my question for you, when you're speaking to these business owners with your experience, right? There's effort, a lot of effort, and money and time, which relates to effort, right? Effort, time, and money. What do you normally hear from people? Do they normally say, "Hey, listen, I'm good at a 5x multiple," even though they know they can get 10 or 12 if they do the right things? So what's that conversation like?
Yeah. Most business owners, Philip, will either tell us that they want to do the work, or they just don't. And it's not because they feel that they're comfortable with where they're at. They just don't. It's just a preference. And the ones that really understand that think of it as a concentrated stock position that has untapped dividends and capital gains that you can capture if you just let it do what it's supposed to do. That's exactly what's going to happen. And if that's important to them, because a healthy business is a monumental wealth strategy for any family, whether it's going to family or they're just going to cash out and use it within the family. It is a complete family wealth builder for generations to come. If it's in the family, it becomes even bigger.
I want to stay on that family, right? So when you have a business, let's say much like mine, I have 3 young boys, and God willing, I think 1, 2, or 3 of them will come into this business. That's the end goal, as long as the industry remains strong, things like that. Transferring to family, what do you see out there? Pros, cons, positives, negatives, good stories, bad stories?
I got them all.
You do.
I wish I didn't, but unfortunately I do.
Yeah. So let's start first, because you've seen a lot. So let's start first with the ugly
things that you have to do if you're going to transition to family members is start having the conversations early, very early. Expectations, what you would like to see, get their feedback. So if we're using your practice as an example, you have to be able to explain the good side of it, the bad side of it, what their expectations should be, help them get educated on it even more so that they can ask you questions that challenge you about how they may view the business differently than you. And that's okay. Because one of the biggest reasons I find that family transitions get stalled or derailed is that you have the existing generation here and the new generation here, and the new generation kind of has some new ideas, and the current older generation just doesn't want to do them because they're afraid or they just feel the old way works. And when you can come together,
that's fireworks.
It works really, really well. And we've had a lot of successful ones and a few bad ones. And the bad ones, we knew almost from the beginning, and we told them that it was going to be bad. And we didn't, to a certain extent, we didn't even really felt like it's not worth having us here because I don't see this working out. Dad's in his upper 80s. He's not even giving the stock to the kids. They're already in their late 50s, early 60s. There's 5 kids. They're already bickering on who's going to be the power trip. You've got disaster written all over it, and that's exactly what it was. Thankfully, there were a couple of siblings that stuck it out, and we helped them, and they were able to salvage it because she wanted to salvage her dad's company in a small community. And so it was pure determination and grit.
So, Vince, what advice can you give to a business owner that's listening to this as it relates to thinking about transferring the business to their family? What are top 1 or 2 things that you can say to them that would help them think about should they transfer to their family, what they need to think about, et cetera?
Well, think about when it is that you want to transfer the business to them, but more importantly, think about, are they really capable of running the business? And if you can answer the second one confidently and say, yeah, my kid or my kids can run this business and run it without me, then start having the conversations.
Okay, so now let's take a scenario where I'm an owner of a business. Mm-hmm. My children want to come into the business, mm-hmm. and I'm concerned about one of them or 2 of them or 3 of them, but they really want to come in the business. Mm-hmm. What do you do in that case?
Well, it's all about the roles and expectations. I have kids in there that don't have primary roles, but they still have stock, and it works very well. But everything is communication and expectations. And when you have that in place, there's a much higher probability of success going into it.
Mm-hmm. So, Vincent, this next question, which I don't know if it's necessarily beyond your scope, but I'm just curious. So you take today with AI, the threat of AI with certain industries, which we know about, software being one of them. I mean, it's not conclusive whether AI is going to be an exact threat to the business. They're assuming it's going to be. I keep saying the same thing, that it's like going to court, being guilty before having a fair trial. And we're seeing that a lot today in the public markets. When buyers are looking to buy a business, mm-hmm. private equity, strategic buyers, what are they doing as it relates to understanding if this particular business will be in business over the next 5-10 years or greater? Do they think like that? And what time frame would they normally think like that?
Well, are you asking me the question in the context of AI?
It's a good question. I mean, so you could start there if you want to, or pre-AI, how did buyers think? You could go
so
both.
Let's just go pre-AI for a couple of minutes. So pre-AI is you want to look at the industry and the industry trends. And is the industry trend increasing, flat, or declining? And it's pretty easy to find out what's going on. And is it projected to be a short-term trend? Is it more long-term trend? And what's really going on inside there? When you take AI into the scope of it, AI is only going to make people that much more efficient.
Right.
So people are running the AI.
Right.
And so when you take an organization of any size and scope, think of it as automation in manufacturing. Okay. In the sense is that automation in manufacturing, you still need people to run the automation, but instead of 5 or 6 people running each machine, you probably can have one, maybe 2 person that's running the automation and can toggle back and forth, and they can manage it. So you have a higher educated individual that is running more things more efficiently. And artificial intelligence is pretty much can be the same thing.
Yeah, I agree with that. I do think, and we can't conclude that right now, but I do think that what it's going to do is exactly what you just said it's going to do, where it's going to enhance humans. I mean, some people are going to lose to their job just like any other major revolutions, of course, right? But I do believe that's going to be the conclusive evidence, and
people who embrace it
will
win.
Yes.
People who embrace it and know where to put it in. We use artificial intelligence in places, and it works beautifully, and we use it with our clients, and they love it.
Yeah,
they embrace. Now, granted, there's some education. Some need less, some need more. But when they really understand that the water in the pool is warm and it's comfortable, and it's okay to do this, then it's fine. We run some webinars with some AI experts. It's not who I am. So we help to educate them as to why they can use it, where it can be fitting in, how can it be more efficient in their organization. And then it helps them to move forward.
Yes, I agree with you. And specifically, I mean, I started building out agents using Copilot, just starting to get into it now. And it's something I do think is going to be very helpful for my business, especially what I do with research and so forth. So no,
absolutely.
Good stuff. Yeah, I agree with you. Give me 1 to 2 key things that really drives a multiple.
Increased free cash flow and efficiencies within the business across your 8 core qualitative assets.
Increasing cash flow or increasing cash flow?
Increasing free cash flow.
Yep.
And then equal efficiencies across your 8 key qualitative assets.
8 key. Can you go through the 8 quality?
Yeah. So the 8 key qualitative assets are your strategic planning, your leadership, your marketing, your sales, your culture, your operations, your finance, and your legal. So when we go in and do a qualitative score, you could look at those, and each one of them either directly or indirectly hit the P&L and balance statement. And what it's going to show is you're going to be strong in some areas, lagging in some, and then you're going to be really lagging in a few others. And when you can create efficiencies at the same level with each one of them, you then create a lot more of an efficient business, less dependent upon the owner. You're generating more free cash flow, which is creating a more valuable organization as you move forward. And then as you de-risk yourself over a period of time, now you're creating a full, fully functional, transferable business that you're probably going from 40 to 60 hours a week down to maybe 15 to 20, 25 tops.
Oh, I love that. I really do. I want to finish off the conversation with, well, first of all, when you think about those 8 key things, if you can imagine a business that is efficient in all those 8 areas, I can see a scenario where best in class is like ready to go for the business, right? So just want to touch upon strategic thinking, because I don't know strategic planning. I feel like business owners do focus on that, but I feel like they don't. And I got to tell you, me as a firm, I have started focusing on that over the past 2 years, and it's been really a game changer in terms of, there's some great books out there, obviously, and there's one called Traction. I'm sure you know about it. Maybe not. I forgot the gentleman who wrote the book. The guy who started EO, I believe, wrote the book.
EO is Gino Wickman. Yeah, he actually lives right here by me.
Yes. Does he really? Mm-hmm. Yeah. So the idea is just quarterly meetings and creating rocks and then moving the rocks forward. And since I've been doing that, we made a lot of leaps in the firm, which is really terrific. So just quickly about strategic planning, what advice can you give business owners on the importance of strategic planning?
The importance of it is strategic planning is priceless, because it's how you make decisions. And it's how you create an organization of what the vision is down the road. If you have no strategic planning, then sales are really just a hope and a prayer. And it's like eat what you kill mentality. Right. Strategic planning allows you to look at big picture. Where are we going to be 60 months from now? well, we're not going to focus on the 60 months. Then we're going to say, where are we going to be 3 years from now? And then you're functioning on a 1-year plan every single year to get there. So it allows you to make better decisions, more quality decisions. The team is involved with those decisions because they've helped to structure the strategic plan. You have buy-in that is then filtered down and communicated to the rest of the employees. And now you're bringing everybody in. Everybody wants to be part of something special.
Right.
I don't care who. Very few people don't want to be part of, hey, I was part of this company and it was here and now it's here. There's very few people that are going to say, hey, I didn't want to be part of that. When they're in there, they want to be part. And today, people want to be part of something extraordinary and special, and they want to make a contribution. And people are smart in general. So tap that, empower them, and extract that data so it helps you move forward.
Yeah, love that. And last question, I'm sorry. Got to ask you one more. Yeah. So culture. Quickly about culture. What do you think about culture, and what advice can you give owners of businesses as it relates to culture?
Your most important asset.
I know everybody says it.
Your most important asset. If you have terrible ownership and leadership, you have terrible culture. If you have great ownership and leadership, you probably have really good culture.
And so great leadership. So take me, I'm an owner of a company. So when you say great leadership, what should I and others be doing to show great leadership that resonates with your team?
Empower your leadership team to make the decisions that they are capable of making and need to make to move the organization forward. Don't hamstring them, right? Make them accountable, track the right metrics that need to be tracked. And if they're not hitting those metrics, find out why and what it's going to take to fix them. It's your role as the CEO to do that. And if they can't fix it, you have to evaluate if you have the right person in the right seat. Because remember, leadership is a learned skill, not a born skill. So you have to empower your leadership not only by giving them the latitude to do what they're supposed to be able to do based on their knowledge, but your role is also to give them more knowledge and more training to become a better leader. So that could be once or twice a year, they're going through an offsite training program on how to be leadership, whether it's through Dale Carnegie or any of the other organizations that are out there, to help them get better as a leadership team, so that they come together as a unit. They come together, one, as a better leader individually, and they come together as a team.
I totally agree with you. And again, a great example of that, we just had a quarterly meeting yesterday, and one of my advisors said that we were talking about going out there and capturing the type of clientele we're looking to work with. And he said something to the fact that I don't think I can really do that. And I'm like, well, what you're saying to yourself is you're defeating yourself before you even go out there and execute on a plan. And so it's a mentality issue. And I was just coaching him on this. So as the leader of my firm, it's me, and I could feel the passion because I have such passion about what we're doing here, what we're trying to accomplish for our clients and the firm. And I can see it really does resonate with my team, and you could feel it. And that's the culture that we're talking about. And so after I said that to my advisor, it was very eye-opening for him. It's just because he needs somebody like me to tell him that you can do it. You don't even know how good you actually are.
I would have just asked him the question. It says, well, why do you feel that way?
That's actually a great question. That's a really good question.
I'm a big believer is when people come to me, and my son Dante, when he does it even today as a husband and a father, and he comes and asks me a question. I said, well, why do you feel that way? What do you think you should do?
Which is a great way to respond.
Yeah, it gets them to become, remember, you have to create really good critical thinkers.
I agree.
And but you give them the education, and help them understand what does that mean. And then they just start growing, give them books to read and then talk about them. Like if you assigned a book a quarter and you took, even a long lunch or something on one Friday, we're going to take a day or a couple hours or whatever. And let's just talk about the book. It's informal. Maybe you have 5 or 6 or 7 talking points. What did we learn out of this, and how can we become better leaders in an organization by what we've just read?
I really love that. I think that's terrific. But going back to, you said your son, regarding my son, we're in lacrosse. He plays lacrosse. He's recruiting year. I have 3 boys, and my oldest, Philip, he's in recruiting time. So when he gets home from lacrosse practice, I'm kind of anxious. Hey, how was practice? How was practice? And he goes, and he'll always say, practice is great. I'm like, well, why was it great?
Yeah.
And then he starts to, I want to know why. Don't just answer me great. Like, why was it great? What'd you do that was great, right? So
what'd you learn in lacrosse today that you didn't know yesterday?
That's good too. Yeah. Vincent, I need you on my team. So that's a separate conversation.
No worries. Yeah, exactly. Right. Absolutely.
So Vincent, the last word is yours. Anything you want to say about your firm, what you do, or anything any other additional message that you'd like to get across to my audience?
Yeah, I think you said most of it at the beginning. So I think your listeners and people that listen to this podcast will get a good understanding of what it is we do. I'll tell you what we don't do. We're not brokers. We're not M&A people. We're not investment bankers. So we don't sell your business. We stay in our lane, and we are here to prepare for you the business to make it fully transferable. So I'm going to take a role from your seat, Philip, in the sense is, we're not governed by the SEC, but we do take a fiduciary responsibility, and we're sitting on the same side of the desk as the owner to prepare that business and that owner for a transition.
Love it. Vincent, your insight today was invaluable. Perspective was great. Really appreciate it. Look forward to working with you as we spoke about in the past.
Yep.
And we'll be in touch soon.
All righty. Sounds great. Thanks for the time. Appreciate it. Enjoy your weekend.
You too.
Bye-bye now.